What if I told you that while everyone was panicking about supermicrocomputer, I made not one, but two buying calls that are now proving to be absolute winners? Stay with me, because what happened next is exactly what we predicted, and more importantly, I'm about to show you why this explosive move might just be the beginning. Hey everyone, Smart Stock Sam here, and welcome back to the channel where we cut through the noise and focus on what really matters: smart money moves. If you're new here, hit that subscribe button and turn on notifications, because we don't just talk about stocks, we identify opportunities before the crowd catches on. And today's video is the perfect example of that. We're diving deep into supermicrocomputer, a stock that just exploded exactly as I predicted, and I'm going to break down why this rally has serious legs and what you need to know right now. So let's rewind a bit. On February 3rd, while the entire market was in panic mode about SMCI's margins, I published a video calling this stock a coiled spring ready to explode. The sentiment was terrible. People were worried about short-term margin compression. Fear was everywhere. But here's what I saw that others didn't. I saw a company sitting on the most explosive growth story in the artificial intelligence infrastructure space, trading at absurdly cheap valuations. I saw a strategic land grab happening in real time, and I knew that the market was completely missing the bigger picture. That same day, February 3rd, Supermicro reported their second quarter earnings. And let me tell you, these weren't just good numbers, they were absolutely spectacular. Revenue came in at $12.68 billion, up a staggering 123.4% year over year. They didn't just meet expectations, they crushed them. This is a company growing at hyperspeed while everyone else in tech is slowing down. But here's where it gets interesting. Even after those blowout earnings, the stock pulled back on February 5th, dropping over 8.5%. The broader market was jittery about big tech capital expenditure plans, and SMCI got caught in the selling pressure. But instead of backing down, I doubled down on my conviction. I put out another video on February 5th comparing SMCI to AMD, and the contrast was stark. While AMD was growing at a respectable 34%, Supermicro was growing at 123%. This wasn't even close. SMCI had formed this incredible silicon meets metal partnership, becoming the crucial bridge between chip makers and the massive data centers powering artificial intelligence. Now, here comes the vindication. February 6th, just one day later, the stock absolutely exploded. SMCI surged 11.4% to close at $34.38. That's nearly a 10% jump in a single session, and it happened because the market finally started to recalculate what's really happening here. Hyperscalers like Alphabet and Amazon are announcing massive AI spending plans. And guess who's building the infrastructure to make it all happen? That's right, supermicrocomputer. Let me break down why my buying calls on February 3rd and 5th were spot on, and more importantly, why this is far from over. First, let's talk about market dominance. SMCI has captured an incredible 27% market share in the AI server space. To put that in perspective, back in 2021, they only had 3.5%. They've gone from a bit player to the dominant force in just a few years. And management isn't slowing down. They've raised their full year 2026 revenue guidance to at least $40 billion. That represents 82% growth over fiscal 2025. These aren't incremental gains, this is explosive, sustained hypergrowth. Now I know what some of you are thinking. Sam, what about those margins? The gross margin dropped to 6.3%. Isn't that a red flag? And this is where you have to understand the strategy at play here. This isn't a margin problem, it's a calculated Blitz scaling strategy. Supermicro is using its differentiated liquid cooling technology and aggressive pricing to lock competitors like Dell and Hewlett-Packard Enterprise completely out of the AI data center market. They're playing the long game, capturing massive market share now while the getting is good. Once they've cemented their position as the go-to provider, those margins will expand, and that's when the real profit explosion happens. Let's talk valuation, because this is where things get really exciting. Despite growing revenue at 123%, SMCI is trading at a forward price to earnings ratio of just 15.83. Compare that to the computer storage devices industry average of 28.9. The stock is trading at nearly half the valuation of its peer group, while growing 2 to 3 times faster. That makes absolutely no sense, and the market is starting to wake up to this disconnect. Even more impressive, the forward price to sales ratio is below 1. Think about that. You're paying less than $1 for every dollar of sales this company is generating. In a normal market environment, a hypergrowth AI infrastructure play would command a premium multiple, not a discount. Smart money is already positioning itself. Institutional investors now own approximately 84% of Supermicro Computer, and major players like Vanguard Group and Jones Financial Companies have significantly increased their stakes recently. These aren't retail traders chasing momentum. These are sophisticated institutional investors who've done their homework and see what's coming. So, where does the stock go from here? Let's look at what Wall Street is saying. The analyst targets are all over the map, which actually creates opportunity. Northland Securities has a $63 price target with a buy rating. KGI Securities is at $60 with an outperform rating. Rosenblatt Securities is at $55, also with a buy. Even the consensus target of $44 represents solid upside from current levels. But here's where my analysis gets really interesting. If Supermicro achieves even a modest reversion to normal tech multiples, we're not talking about $40 or $50. We could be looking at a price range anywhere from $130 to over $200 per share. Let me give you a conservative scenario. If we applied just a 0.75 times price to sales multiple, which is still below where comparable growth companies trade, we get a fair value around $55. That's 60% upside from where we closed on Friday. And that's the conservative case. The bull case, the scenario where AI infrastructure spending continues to accelerate and SMCI maintains its market leadership, that's where we start talking about triple-digit stock prices. Here's what's driving my conviction. The artificial intelligence revolution isn't slowing down, it's accelerating. Every major tech company is in an arms race to build out AI infrastructure. Microsoft, Google, Amazon, Meta, they're all spending tens of billions of dollars on data centers and computing power. And Supermicro Computer sits right at the center of this spending wave. They're not just selling servers, they're providing the complete integrated solution that makes AI possible at scale. That's a massive competitive advantage, and it's why I believe they're achieving what I call a permanent market share victory. The February 6th rally wasn't a fluke, and it wasn't the end of the move. It was confirmation that the market is finally starting to recognize what I've been telling you all along. Supermicro Computer is one of the most compelling risk-reward opportunities in the entire technology sector right now. My buying calls on February 3rd and 5th captured the bottom of this move, and if you followed along, congratulations, you're already sitting on nice gains. But more importantly, if you missed those initial calls, I believe there's still substantial upside ahead. Like always, stay disciplined, stay informed, and always look for opportunities where the market has mispriced value. Supermicro Computer is the perfect example of what happens when you have the courage to buy when others are fearful. If you found this analysis valuable, smash that like button, subscribe to the channel, and drop a comment below telling me what you think about SMCI's explosive move. Are you in on this trade, or are you waiting for a better entry? I want to hear from you. Until next time, keep investing smart, and I'll see you in the next video.